Namaskar, Adab, Salam, Vadakkam and Sat Shri Akal. Hi guys, my name is Jayant Mundhra and welcome to my channel. In today's video, we are going to deep dive into Infibeam Avenues, which is India's first ever listed fintech. And after that, many more basically came about. Recently, Paytm also did and Policy Bazaar did. But Infibeam, number one, the first one. So let us understand what is about, the business is about, and how it has been trading so far, what the future looks like. We'll go into all of that. So when we look at the numbers, let us first begin with the transaction value because the business's core value is about payments. It provides payment services, right? So when we look at the transacted value via its platforms, you would basically see that for over 5 years the number grew 10x. In fact, in the last year, it has grown by another 51%. So effectively, the business has basically grown by over 15x over this very short span, right? So in 6 years, 15x in terms of transaction value, and revenues, those have grown by almost, you can say, 2.5x or something like that. Now one might ask that when transaction value has gone up by 15x, why not the revenue? That is because when transaction value has gone up, it is driven by low margin areas, low margin businesses, sub businesses, and not by the high margin areas, right? High margin areas are also growing, but low margin areas are growing much faster, and the result is revenue is not growing in proportion to the transaction processing value. But as the value goes up, same way revenue also goes up by a certain degree. Nonetheless, a 28% growth rate is not a bad one. That is very clear. But one thing to be very clear about is, so when we talk of Infibeam, guys, it has two sides of businesses. One is the payments businesses and one is the platform businesses, right? Platform businesses is where you have built a platform, you offer it to enterprises like say Geo or government or Dabur or some other one, right? And whatever transactions they get on that platform, Infibeam gets a cut on that as well, right? A particular fee on that. So those are platform businesses and there is payment side of business. Now, if you look at these numbers that I've written down here, you would basically see that the platform side of the businesses, they contributed almost 21% of the overall revenues back in FY21. That is just about 2 years ago. A little over that, over 2 years ago, right? In FY22, it shrank to 13%, and in FY23, it shrank to just 5%. What I'm trying to say is that the transaction related business, the payment related business is growing much faster than the platform related business. Is that good or bad? We will be delving into that as well. So hang on. So moving ahead, just look at these numbers, profitability and debt, right? You would see that the company's profits have grown, profits after tax have grown very handsomely, right? And in the latest year, that is FY23, the profit after tax figure, PAT figure, grew by 95%. It almost doubled. And a key factor in that was the company has been consistently bringing down its debt. And in FY22, in fact, it turned debt free. But does that mean that whatever payment was going towards installments and debt, etc., has basically added to profitability, and that is why we are seeing this number? The answer is no. Yes, no, having no debt and consistently decreasing debt before that has helped shore up the profitability figure, no doubt about that. But there are other reasons as well. So that brings us about to NTR, that is net take rate. So the company has payments business in India as well as abroad in certain nations. We'll check that out in some time. But if you see the take rate is something that you charge on every transaction on an average, right? So whatever transaction is happening, a certain percentage is coming to Infibeam as its money, its income. So that used to be around 4.8 BPS. So basically 0.048%, right, of whatever transaction happens. That has grown to almost 8.9 BPS, right? In just about 7 quarters, this number has practically gone from almost 5 to almost 9. So it's a significant increase, and that is directly adding to the margins of the company. And that is also a key factor why the profits have soared so beautifully, profit after tax, right? And what also matters is that the company is aiming for a double-digit net take rate by end of FY24. So this 9 figure that we see out here, it should basically reach 10 or beyond, something like that, which will again add directly to the margins. So this is very good news and hope they achieve it. And just a thing about this company, it is known to be a company, it's a small company, but it is known to always give guidance and beat it. So probably it is the case that the company is, very conservative when giving guidance and then it beats it. But it is also known to give aggressive targets as well. So it is a company that is known to give aggressive targets which it always beats in general. That is what has happened so far. So one can actually hope that even this time what will happen is that they will achieve this goal very well, right? So that's a very big positive. Now it is important to understand what businesses are driving an increase in NTR, that is net take rate, and what businesses probably bring it down, and what the overall structure of the business is anyhow, right? So let us talk about that. Check out this slide. So what I've done is I have basically broken down different businesses out here that Infibeam basically runs, right? So first is payment gateway business, that is CCAvenue. And then there is bill payments, that is BillAvenue. There is GEM platform, that is government e-marketplace. Basically it is a government platform, government e-commerce site that is run by Infibeam. Okay. And it is, by the way, GEM is the India's largest e-commerce website. It's just that we don't talk about it as much as Amazon or Flipkart because those are B2C in general, right? Then there is basically e-commerce platforms where, just like GEM, Infibeam says that anyone can build their own branded website, their own basically marketplace, and sell things via it, sell services via it, and whatever basically transactions happen, whatever happens out there, its tech will take care of all everything out there, right? Then there is lending business where basically it provides its tech to the banks and NBFCs, etc. So if you think about it, the banks, those are not tech companies, right? And if they have to build their own tech, it generally takes a lot of time, a lot of investments, etc. Why not outsource it, or maybe probably take it from someone who has already built it, right? So what Infibeam has done is it has built a wholesome credit platform from which sums can be disbursed, credit analytics can be performed, and via that it basically helps banks and NBFCs to go completely digital in terms of lending side of things. That is what this particular product is about. And over the last year, though on a small base, it has grown 2x. So it is also growing very well. Now, if you talk about the e-commerce business, that is the e-commerce portal, B2B business. This is a high volume business, but a low take rate business, right? Same for GEM. High volume, but low take rate business. Because the volumes are so high, government gets, or the enterprises get to basically negotiate a lower take rate. But given it anyways adds to the profitability, Infibeam is okay doing that business. Okay. When we talk about BillAvenue, it is basically based on governments, or sorry, NPCI's, which is a quasi-government body. NPCI's BBPS. BBPS is what? Bharat Bill Payment System. And under that, basically what happens is Infibeam brings on board a lot of different merchants of different kinds, different businesses, and whenever someone pays the merchants that have been onboarded by Infibeam makes money. That is how it basically works. And it is a high margin business, high gross margin business. And so Infibeam is a happy player in this arena, right? And then there is basically the payment gateway business, the mainstay, the one that brings the maximum amount of money in the game. So if you think about this one, this is both India and it has recently gone international. And here it basically earns a percentage of the transactions and often a flat fee as well. When does flat fee come into play? That is basically for ResAvenue. ResAvenue is a particular special niche platform under CCAvenue, which is basically for restaurant industry, okay, for them to run their own payment gateways in such a way that users can basically go there, book rooms, etc., which is not generally possible in any random payment gateway. So that is what the overall business is looking like, right? So it must be seeming like too much gyan in one single slide, right? So don't worry, we are going to focus on a few, right? So we'll talk about CCAvenue in particular, we'll talk about BillAvenue, and we will talk about GEM in very detail. The rest are too small right now or are not contributing that much value in the overall scheme of things. So we are going to leave them on the sidelines for now. So let us start with CCAvenue for now, right? So CCAvenue is just like if anyone would have basically used Paytm for business app, it is quite similar. Any merchant can basically create, accept payments via a particular app itself, or they can basically create links and send to anyone to pay, receive payments. They can use the simple app to basically as a QR tool or an app pay or different such options, right? And CCAvenue is basically a payments gateway as well. So anyone can basically build a marketplace and attach a CCAvenue payment gateway to that to receive payments. And also CCAvenue actually claims that, we offer the largest set of payment options to anyone in India. So these are a few things to know about CCAvenue, the business that we are going to dive into. So let us look at its data. So the total amount of value of transactions that basically it processes has been growing fantabulously. If you look at the numbers, basically it was something like 62,000 crores in FY20. It grew to 95,000 crores. It grew to 1,66,000 crores or 1,67,000 crores. And that grew to 2,16,000 crores. Consistently growing very beautifully. Amazing, right? And what makes it even better is that if you look at the distribution of this part, how much of this transaction processing value is coming from what particular segment, credit cards, UPI or other things, you would see that the share of credit cards is growing consistently. And that matters a lot because credit cards offer the highest MDR, meaning in simple language, highest margins. And then comes basically this particular segment, which is about basically net banking or RTGS or probably debit cards, etc., where the margins are lower, but still there are some margins, right? And then there is UPI, which has grown in overall fraction as is visible anywhere in India, but it offers zero money. The good part is the overall numbers have grown almost, you can say, 4x, and at the same time credit card share has grown from 34% to 47%. So that is driving in the primary growth in NTR that we saw just some time back, from 5 to 9%, from 5 BPS to 9 BPS. That is out here. Credit cards are basically driving that in the very core of things. Number one. Now, if you dive further into it, you will see that the CCAvenue business is onboarding merchants at a very rapid pace. In last year alone, its merchant base basically grew by 153%, right? In terms of additions. Compared to the additions previous year, they accelerated significantly in the latest year. And if you would actually look at the international side of the business, it has gotten to a 23,000 crore annual run rate of value, right? And it has grown 100% year on year on a small base, of course. And it has gotten to number two position in the UAE when it comes to non-bank entities in processing payments. So growing very rapidly. And it is not that it is present only in UAE, but UAE, Oman and Saudi. It is expanding very rapidly. In UAE, it's got there first, and therefore the numbers are more concentrated in the UAE right now. Now, if you look at the clientele to understand what scale are we talking about, you would basically see that it's the who's who of the India Inc. and even abroad, right? And if you look at it, there is Paytm out here. There is Freecharge. There is Ola Money. There is HDFC Bank. These are the fintechs and the banks. There is also big names like Jio, which basically is getting into financial services and all these kind of things, and yet they use Infibeam services deep down. So that speaks a lot about what kind of a product, what powerful product you have built out here, CCAvenue particularly, right? Even when you look at the GCC business, the Gulf business, which I was just talking about, UAE, Oman, as well as Saudi, just look at the kind of companies that they have onboarded. There is basically Radisson, Tim Hortons, Yahoo. So it basically very clearly lays out that, okay, they have the quality of the businesses, right? The best of businesses out there are betting on CreditAvenue. That is what the business wants to tell you by showing this slide. And what are they doing to further add on to the margins? So they are actually expanding outside, not just GCC, but even beyond that. And the very key criteria is wherever we expand, it should bring in higher net take rate on the transactions. It's as simple as that, because that will add to the overall margins and that will help bring more profitability in the game, right? So they've already entered UAE, Saudi, Oman, as we just talked about. UAE, it is one of the biggest players as well, right? And they are now expanding into Australia in the H2, that is second half of this particular financial year. And USA is also slated for H2 or probably early of next year, right? So Australia and USA are very high margin business, very high margin geographies. If it can nail it there, it will be very positive. And thereafter, what would come is Southeast Asian economies and other geographies over the period of next 3 to 5 years. So that is too distant. That is why I basically highlighted this particular part, that it has already kind of made its name in the GCC space and is growing there rapidly. And in USA and Australia, it is getting there next to further bet on the markets which offer higher margins, higher take rate. Good. Cools. So what we know by now is that CCAvenue is growing very rapidly. It's a high margin business and it is simultaneously expanding into higher margin business markets as well, all at the same time. So it is all very, very positive so far, right? So let us get into the next business, that is BAB. So BAB Enterprise is about basically e-commerce marketplace for enterprises, right? So we talked about government e-marketplace just a short while back. That is what this is about. Its partners include not just government e-marketplace or the government, but also companies like say Sony or Jio. So if you go to Sony's own website in India and try to shop something, this entire stack is basically run by Infibeam. Same for Jio's. If you go to My Jio app, everything is basically being run by Infibeam, right? So this is what it is about. So the biggest business that basically runs BAB is government e-marketplace. That is government's own marketplace e-commerce business, which is also, as I said, India's largest e-commerce portal so far. So if you look at the business that is happening out there, just look at the numbers. It has grown by leaps and bounds. In the last 1 year alone, it is almost 90% up, right? And on each of these transactions, Infibeam earns a small undisclosed take rate. And as this business grows, it keeps on adding more and more to Infibeam's earnings. And the biggest positive is that this is something that the government is pushing immensely. It all started with a few ministries in the government back in FY 2017 and 2018, right? And then it was expanded to all the ministries of the central government. And then it was also made compulsory for all the state governments and union territories to buy using government e-marketplace. And then all the government PSUs and public sector banks also came into this fold. So even when they have to say buy 100 laptops or 2000 laptops or say cars for example, it all has to happen via government e-marketplace. That is how this basically runs. And on all such business happening, Infibeam makes a cut. It earns something. So that is how this particular business is running out. Cool. So what we know about this particular scheme of things is that the BAB business is growing by leaps and bounds, but it is a high volume, low NTR, that is low take rate business, right? But it brings in solid revenues and profits overall. Hence, good news. Cool. All right. So we move to the next line of business, the last one that we are going to talk about today. It's BillAvenue. So BillAvenue is basically based on BBPS, that is Bharat Bill Payment System, which is run by NPCI. And out here, as I mentioned before, what Infibeam does is it onboards different merchants and enables them to receive bill payments from anywhere. Users can be anywhere, going to a single site, they can basically pay the bills, right? It is as simple as that. And look at how that business has grown. So it is a high 40% gross margin business, growing very rapidly. And the Infibeam management is very bullish on this one. And if you look at the numbers, they have also grown very rapidly, very beautifully, very decently. So there is nothing to complain unless you look at how the industry has grown. So if you look at these numbers, what you realize is that Infibeam's BillAvenue has actually grown very beautifully, but it has grown slower than the wider industry. So there are other players in the industry who are basically growing much, much faster in this particular business, that is BBPS. And who are those particular players? So if you think about it, do you realize that Cred recently launched things like, credit card payments, phone recharges or LPG cylinder booking, etc. That is all run via BBPS only. So Cred is also a competitor. Same for Paytm as well. So all of those businesses use BBPS and they compete out here, and they are probably growing much faster than this one is. And the numbers are very clear. So you can see out here, numbers probably grew by almost 70-80% for the overall industry, while for BillAvenue it probably grew by around 45%, 50% or something like that. So the business is growing good, but not as good as other players in the market. That is what we learn. So overall, what we have seen so far is that, BBPS or BillAvenue is basically growing value of transactions out there, but the volumes are not bringing in great income, but a certain amount of income, and that adds to profitability. But given BillAvenue is growing slower than the rest of the market, that is a bit of cause of concern. And overall, what we know is that Infibeam Avenues as a business is growing rapidly with key focus on just three things, that is net take rate, profitability and margins. It is very clear. It is expanding into new territories, keeping in mind that the margin should be high, the net take rate should go high. Profitability is a key concern. That is why they have brought down the debt to zero, and they don't intend to take on more debt either. And net take rate is the key feature that they are focusing on. That is what we get to take away. That is the entire analysis for today. I hope you got to learn a lot about India's first listed fintech. I think we have tried to cover 3 different businesses under it today. If you like the video, guys, do like the particular button out there. Do subscribe to the channel. Do hit the notification bell and share it across. And if you'd like to see more of this stuff, we post a video every Monday, Wednesday, and Friday at 6 p.m. Do tune in. So that's all. Thank you so much.